Elon Musk just triggered another Tesla stock avalanche. While he promised he was done selling Tesla stock through 2024 and kept that pledge, recent insider selling patterns and Tesla's worst performance in over a decade have investors panicking. Tesla lost $68 billion in value after Musk's latest political announcement, and the stock is down 27% in just 2 months. What's really happening behind the scenes? Let's start with the brutal reality. Tesla had its worst year in more than a decade, reporting a 1.1% year-over-year sales loss for 2024. The stock has been in free fall, and Tesla shares plunged 28% in February, their worst month since December 2022. The numbers are staggering. Elon Musk lost $52 billion in net worth since the year began, but he's still the richest person in the world by a long shot. The market capitalization of Tesla's stock fell from about $1.5 trillion in December 2024 to between $700 billion and $880 billion in March 2025. This isn't just a temporary dip, it's a fundamental shift in how investors view Tesla's future prospects. While Musk himself hasn't sold Tesla stock recently, insider selling has been rampant. The estranged son of Australian media mogul Rupert Murdoch contributed to the worst single-day loss for Tesla since September 2020. James Murdoch, a Tesla board member and Musk confidant, cashed out $13 million worth of shares during a historic single-day plunge. First, he promised he was done selling Tesla stock through 2024, a pledge he kept, while later he accelerated the timetable for the launch of a new entry-level model to meet investor demands. There, the jury is still out. But the question remains, what's driving this wave of insider selling? To understand the current situation, we need to look at Musk's previous stock sales. Elon Musk and the Tesla board are facing a shareholder suit over his sale of $7.5 billion worth of Tesla shares in late 2022, ahead of a January 2023 sales report that sent the price of that stock plunging. This lawsuit alleges that Musk had inside knowledge of Tesla's weak sales performance and sold stock before that information became public. The pattern of selling before bad news has become a recurring concern for Tesla shareholders. One of the biggest factors affecting Tesla's stock price is Musk's political involvement. Elon Musk said he would form a new political party called the America Party. This announcement alone caused Tesla to lose $68 billion in value. Musk spent the first few months of 2025 spearheading President Trump's Department of Government Efficiency, DOGE, slashing the size of the federal government. Tesla shares plunged 28% in February, their worst month since December 2022. This coincided with Musk's first full month in the White House, suggesting investors are concerned about his divided attention. Beyond Musk's distractions, Tesla faces serious business challenges. But deliveries grew only 38% that year, and in 2024 they shrank by 1%. The company can't produce more cars if they aren't selling, and early signs suggest 2025 could be significantly worse. In January, Tesla's sales plunged more than 50% year-over-year in Europe. Tesla's brand value now stands at an estimated $43 billion, down from $58.3 billion at the beginning of 2024 and $66.2 billion at the start of 2023, the firm said in its annual ranking. Toyota is the most valuable brand in autos at $64.7 billion, with Mercedes close behind at $53 billion. Tesla's stock decline isn't happening in a vacuum. Chinese competitors like BYD are eating into Tesla's market share globally, while legacy automakers are launching competitive EV models. Tesla's first-mover advantage is eroding rapidly. The company's aging lineup is another concern. Without major new models, Tesla is struggling to maintain consumer interest. The promised $25,000 Tesla was canceled, leaving the company without a mass-market offering to compete with affordable EVs from China. The market's reaction to Tesla's challenges has been swift and severe. The drop comes as shares of the EV maker saw a 22% rally in May, with Musk wrapping up his time as head of Trump's Department of Government Efficiency, or DOGE. However, this brief rally was quickly erased by continued concerns about the company's direction. The beginning of 2024 was almost as bad for Tesla. with the stock tumbling 25% to open the year. The company reported revenue and profit for the fourth quarter that trailed estimates, partly because of steep price cuts around the world. Tesla warned that volume growth in 2024 may be notably lower than expected. Investors are increasingly concerned about Musk's divided attention. His involvement in X, formerly Twitter, SpaceX, Neuralink, and now politics means less time focused on Tesla's core business. Tesla shares gained nearly 7% on Tuesday after CEO Elon Musk over the weekend reiterated his intent to home in on his businesses ahead of the latest SpaceX rocket launch. The billionaire wrote in a post to his social media platform X that he needs to be super focused on X, artificial intelligence, and his other ventures. Notice that Tesla wasn't specifically mentioned in his super focused priorities, which speaks volumes about where his attention really lies. Interestingly, SpaceX's valuation reached $350 billion by December 2024. Musk's 42% stake in SpaceX became his most valuable asset, surpassing his holdings in Tesla. This shift in his wealth concentration might explain his reduced focus on Tesla. As SpaceX becomes more valuable than his Tesla holdings, Musk's incentives naturally shift. This could explain why he's been more willing to let Tesla's stock price decline while focusing on other ventures. While we don't have evidence of a specific recent $5 billion stock sale by Musk, the pattern of insider selling and stock price decline suggests significant liquidation pressure. The historical $7.5 billion sale provides a template for understanding how and why these large sales occur. The timing of previous sales, right before bad news, suggests a pattern of information asymmetry that favors insiders over regular shareholders. This erodes trust in the stock and contributes to volatility. For everyday Tesla shareholders, this situation creates several concerns. First, the pattern of insider selling before bad news suggests that regular investors are at an information disadvantage. By the time negative news becomes public, insiders have already acted on it. Second, Musk's divided attention means Tesla isn't getting the leadership focus it needs during a critical period. With increasing competition and slowing growth, Tesla needs its CEO to be fully engaged. Third, the political distractions create additional volatility that has nothing to do with Tesla's business fundamentals. Every political controversy affects the stock price. Now, there are so many persisting concerns, not to mention a growing list of challenges facing the company. The combination of slowing growth, increased competition, political distractions, and insider selling creates a perfect storm for Tesla shareholders. The company's transition from a growth stock to a mature automotive company hasn't gone smoothly. Investors who bought Tesla expecting explosive growth are now facing the reality of a company struggling with basic operational metrics. Looking ahead, Tesla faces several critical challenges. The robotaxi pivot remains unproven, with regulatory and technical hurdles still to overcome. The canceled $25,000 Tesla leaves the company without a mass market strategy. Political involvement continues to distract from core business operations. Tesla finally announced the date of its annual meeting. That's after dozens of angry shareholders asked what was taking it so long. This delay itself signals internal challenges and shareholder frustration. For investors considering Tesla stock, the current situation presents both risks and opportunities. The stock's decline has made it more affordable, but the fundamental challenges remain unresolved. The key question is whether Tesla can return to growth, while Musk's attention is divided across multiple ventures. Historical evidence suggests that companies perform better when their CEOs are fully focused on the core business. This situation offers several lessons for investors. First, insider selling patterns can provide early warning signs of problems. When key insiders consistently sell before bad news, it's worth paying attention. Second, CEO focus matters enormously, especially for companies in competitive markets. Divided attention can lead to strategic mistakes and missed opportunities. Third, political involvement by CEOs can create additional volatility that's unrelated to business fundamentals. This adds risk that many investors didn't sign up for. So why are insiders selling Tesla stock now? The answer lies in a combination of factors: fundamental business challenges, increased competition, political distractions, and a CEO whose attention is divided across multiple ventures. While Musk technically kept his promise not to sell Tesla stock through 2024, the broader pattern of insider selling and stock decline suggests deeper problems. Tesla shareholders are facing a company in transition, with an uncertain future and a distracted leader. The $68 billion loss in value after Musk's political announcement shows how his non-Tesla activities directly impact shareholder value. For a company already struggling with growth and competition, these additional distractions are particularly damaging. What do you think? Is Tesla's stock decline justified by its fundamental challenges? Or is this an overreaction to temporary problems? Should CEOs be allowed to pursue political careers while running public companies? Share your thoughts in the comments below. If you found this analysis helpful, make sure to hit that like button and subscribe to the channel for more in-depth coverage of Tesla and the broader EV market. Ring the notification bell so you never miss our latest videos on the companies and leaders shaping the future of transportation. Thanks for watching, and I'll see you in the next video where we'll analyze whether Tesla can recover from its current challenges or if this marks the beginning of a longer-term decline. Until then, invest wisely.